All right, welcome everyone to the bunker. Today I'll be doing a short and sweet video going over my trading setup, why I trade futures and prop firms, how to get into them, and some common pitfalls to avoid. So first of all, this will just be a quick video, just getting started. If you have no experience with like candlesticks and what a candlestick is, I recommend maybe watching a video on it. There's tons on YouTube. If you have no idea what futures are, there's also a lot of resources out there. I do plan on making a video series of like from zero to hero, like beginner, early, like you have no idea what is going on. That'll come as the weeks go by. I just need time to kind of prepare that and finish and make that happen. So that'll take some time. Today, I just want to go over the basics. I'm going to assume that you have a little bit of an understanding of what a chart is, what candlesticks are. Yeah, let's get right into it. So I trade futures. Why do I trade futures? They're 24/5 market. So they trade around the clock, Monday through Friday. They're closed for about 1 hour per day between 4 to 5 New York, I believe. But you can trade them. Sunday night is the overnight Asia Open, and then we trade all night through the London and into the New York, and then the markets do not close until that Monday. If you started Sunday night at 4 p.m. and they'll be closed for an hour, and then we open back up at around 6 p.m. At 6 p.m. New York actually. And then we go all night into the next day's session. So they're very easy to make work if you have a full-time job. It's not something that you need to really, you have to be to the New York session. Sure, it helps being there and having the time to trade the New York session the way that I do, as there's the most liquidity and you'll have a lot of good setups. But you can make this work trading in the evenings. If you're in Europe, for example, you can trade the London, which is like the 2 a.m. session and onwards. If you have a day job and you're in North America, you can trade pre-market. So let's say like 6 a.m. to 8 a.m. There's some really nice, easy moves at times. So it all depends how it fits your lifestyle. But futures is probably one of the easiest things to get into, in my opinion, and one of the best markets to trade, especially in this day and age. So you can trade all kinds of tickers and products. So there's indices, bonds, commodities, rare metals. Here's a couple examples. So you got NAS 100, which is NQ, the S&P 500, which is ES, the Russell 2000, which is your small caps, that's RTY, gold is GC, Dow Jones Industrial is 30, is YM. So there's a lot of different options. There's silver, there's natural gas, all kinds of things you can trade. You can trade the 30-year treasury bonds, like whatever your heart desires. Okay. Another reason is they're easy to trade compared to stocks and options. So as commonly, if you're trading things such as Tesla or small caps or Amazon, Meta, whatever, large cap, small cap, anything in between, if you want to short the stock, you have to borrow those shares to short, buy back, and return to the person you borrowed from, which is generally just going to be through your broker, but you have to pay fees to borrow these shares. Whereas with futures, you don't have to. You can just sell or buy contracts at will. It's on a contract basis. So if you're trading NQ here, for example, and you're shorting a contract, you can just get in. You can just click short, and you're in the market. You don't have to wait. You don't have to decide, hey, I want to short, I don't know, Tesla at $300 and I have to borrow these shares to do that. So really easy to just get in and out of the market. You can buy, you can sell, you can long, you can short. It's super quick, super easy. You don't have to worry about decay. There's no decay. There's no Greeks like there is in options. You can long the market on a Monday and hold it for 3 or 4 days until like Friday. Like there's no one's telling you to close your positions. Especially if you have your own personal account with a broker. If you're with prop firms, they will close out your position at end of day. So there's not really a prop option to hold overnight. But if you open up your own personal account, you can definitely hold it overnight, and you're not going to get eaten up by some kind of Greek or time decay or whatever, right? Like your stuff isn't going to expire. So, and they're also some of the most liquid markets in the world. That's kind of the final point. There's billions of dollars being traded every single day, especially in something that's super heavy like ES. If you actually look at the order book and the DOM, the depth of market of ES, there's like hundreds of orders waiting there, right? So it's definitely a liquid market that you can easily get in and out of. Some are less liquid than others. So like if you want to trade the Nikkei, which is the Japanese, like there's not really a good feed for that, and you might get a lot of slippage, right? So you kind of gotta find something that really jives with your trading style and kind of go from there. The most popular are NQ and ES by far. NQ is kind of like if you're on crack, like it's just, it moves super fast. You can make and lose a lot of money very quickly. Whereas ES is kind of its slower brother. It's a little bit more lethargic. Their moves take time, but there is not such huge P&L swings. Like if you get into position, like it could take a couple of minutes for it to pan out, and you have some time to think. It's not so, you know, on your feet. So there's a lot of pros and cons to both. So it's kind of like what you like trading and what kind of fits your risk profile in your type of environment that you like to trade in. So I personally stick to NQ, which is my bread and butter. I've been trading it for 2 years now, just over 2 years, and I've really come to like it, and I'm accustomed to the way it moves. So anyways, another option is if you do trade futures and you plan on going with prop firms, you can scale extremely fast. What I mean by that is that, let's say you buy an account at one of the big firms like Top Step or Apex. You are paying 85 USD, 100 USD to get one of these evaluations, right? And let's say you pass the evaluation on the first try. You then have to pay an activation fee on most of these prop firms, especially with Apex. There's another $100, $85 activation fee. Let's say all in, like you're in like $250, right? Having a funded PA account with these firms. You've now essentially turned your $250 into $2,500 of drawdown, aka capital that you can trade with, right? So the way these firms work is that, let's say you sign up for a 50K account with them, you will get that 50K account, but it's only $50,000 worth of size. So you can trade, let's say 10 contracts with that 50K account. But in reality, because all these firms have something called a trailing drawdown, that means that as you go into profit on your account, the drawdown also increases. And if you get down to that drawdown, it'll liquidate the account and essentially blow it so the account's gone. This is kind of something that props do to ensure profitability. A lot of traders cannot trade around these restrictions that they have, especially these trailing drawdowns. And certain props make it easier than others to pass the evaluation, to get a payout, etc., etc. There's a lot of different rules of some of these, and we can go over that in a bit. But the scalability of these prop firms is crazy, because let's say you have one account and it's $2,500 worth of actual tradable money. If you grow this to, let's say, 5 or 6 grand, you can take out a certain percentage of that every single month. And that's per one account. So you can turn, let's say one of these is 2,500. Let's say you get 5 of them. Now you're looking at, or 4 of them, you're looking at 10K in actual money, and you've only spent $1,000. So you're basically 10 timesing your leverage on some of these accounts. So that's kind of the main draw of trading of props. Is like, if you know what you're doing and you're kind of a seasoned veteran, you can scale incredibly fast. You can go from like making nothing to $40,000 in withdrawals of Apex within 10 days if you know what you're doing, right? It's difficult, but it's theoretically possible, because you can have 20 accounts of Apex trading. And each of the accounts you can pull out $2,000 after 8 days of trading. So the proposition there is that it's super easy to make a lot of money really fast. The only thing is having to pass these combines and also maintaining the accounts is very, very difficult. And these prop firms make it very hard with their rules to maintain profitability. And some of these rules are a little bit sneaky, where they have a 30% consistency rule. You can only have a risk reward of 5-to-1. You cannot have a position go against you more than $750. They have a lot of different rules that they apply to make sure that they don't have to pay you out. But if you can follow the rules, they're definitely the choice I would go with. There's also, you can have your own accounts, your own live funded accounts. So you could, in theory, open an account with someone like AMP or Iron Beam, even IBKR, and then fund it with $5,000, and you can trade that $5,000 and trade with the margins that your broker gives you. So anyways, that's enough about that. Let's go on to some of the useful links that I have and that I use. So this trading software is called Quant Tower. I've been using it for, I want to say, 3 or 4 years. It's excellent. It's free. If you need some volume analysis, I would definitely maybe not recommend this, because it only allows you, the free version only allows you 2 indicators. So if any, like, and volume is considered an indicator by them. So if you want like the DOM or like volume, any profile stuff, footprints, you're gonna have to pay for this. But honestly, you can have 2 indicators for free. It's a great charting software. It looks clean. I really enjoy it. And it's been excellent to me. So I highly recommend it. You can download it at quanttower.com. It is free. And there, like I said, there's a paid version, but honestly, you don't need it, especially if you're a beginner. It's not really worth it. All right, so there's stuff like Iron Beam that you can fund your own account with. They're an all-in-one platform. If you want to open your own live account, you can transfer $5,000 in there and then trade with these guys. There's Ninja Trader, there's TraderRate. There's a couple different products that are out there in terms of brokers that you can trade with. But like I said, Quant Tower is my go-to. It's easy, it's simple, it's super effective. So yeah. Anyways, one important link that I really like and use is Forex Factory. It's a must because it gives you all the news for the upcoming week. So this is from January 19th to January 25th. This will be next week, and it's a bank holiday, so that's the USD. And there'll be slower action, right? Just because it's Martin Luther King Jr. Day, I believe. So any of the red folders you want to pay attention to, especially when they say USD beside them. This will affect the New York Stock Exchange and all the indices that trade on it. So NQ, ES, Russell 2000, like this is just basically news that correlate to the country or the currency that is stated in here. So USD are the super important ones and all the red folders. So if you are trading the Toronto Stock Exchange, then these would affect you because these are CAD and these are red folders. New Zealand dollar, Australian dollar, Great Britain pound, euros, nothing. So let's say looking at this week, markets closed this day. This is a bank holiday. We don't have anything too crazy. We got the unemployment claims in the United States. That's at 7:30 my time on the 23rd. And then on Friday, we have a lot of news in different countries. We got the Japanese having a new policy rate. The French have some manufacturing PMI. The Germans have their manufacturing PMI. The British do, and the US as well. So Friday will be a big day with a lot of news. Typically only the USD news will affect the markets, but you can also expect some volatility on some of these Canadian pairs and New Zealand dollar. So this is super helpful. I like bar chart as well for telling me when to roll over contracts. So the way that futures work, there's 4 contracts. So it's March, June, September, December, March, June, September, December. Every month has a letter associated with it. So March is H, June is M, September is U, and December is Z, and so on and so forth. And then every 3-4 months, contract roll over. The way I determine that is if the volume and open interest of the new month exceeds the last month is when I roll over. So let's look at here June and September, right? Right now, the June contract has 9,501 in open interest and a volume of about almost 2,000, whereas September has 138 and 811. And then same with the March contract, which is what we're trading on right now. That has open interest of 2 million and an average daily volume of 1.3 million, right? When you see that June's numbers exceed the previous March's numbers, that's when I decide it's time to finally switch over and roll contracts. Typically, if you just trade the actual ticker instead of trading the contract, it'll automatically roll you over. So if you click on, let's say, ES here, there's obviously the front month. If you just trade the front month, it'll just roll you over to each month. But I actually like selecting the ES, H5, M5, U5. I like to actually trade the month that we're in. I don't trade ES, so I have it on the front month. This is just for charting. I trade NQ, and my NQ is on H5 right now. So that's something that a futures video on YouTube will basically explain more in detail. You don't really need to worry about it too much, but I will make another video going over the intricate details of all of this. Anyways, let's move on. Prop firm. So this is Apex Trader Funding. This is who I am currently funded with. I do have 16 accounts of them, PA accounts. And what I would do is, if you want to get started with any of these, is just to get familiar with them, go through their FAQs, learn about their trailing thresholds. Just go through their website, and they typically explain everything very well. Here they have their plans down here. So 150K, 250K, trade of 8, same thing, 150K, 250K, 300K, 100K static. So just get familiar with some of these. This is Apex. This is Tradeify. Tradeify, they are straight sim to funded, so you don't actually have to pass an evaluation. You could just get a funded account right off the hop, but these are more expensive. So as you can see, a 50K straight to sim funded is $550 one-time fee. So that means that you don't have to pass an eval. You're just straight into a funded account, and you have to basically adhere to their rules before you can get a payout. The consistency on these is 20%, which is quite low. Apex, for example, has a 30% consistency. What this means is basically that if you have a profit of $4,000, any single day cannot be more than 20% of that $4,000. That's $800. So the most profit you can make in one day is $800 without breaking their consistency rule. Okay, so you have to make multiple trades of no more than $800 in profit a day, get past this 4,000, and then you can withdraw money. This is the same with Apex. Apex has a 30%. So let's say you want to grow the account to 4,000 and then take out money. Same thing, 4,000 times 30%. You cannot make more than $1,200 in a day to be able to take money out at $4,000 in profits. So it's something to be aware of. If you guys have questions about it, you can ask in the Discord. I can go over that. There's also Top Step. Top Step is probably one of the easiest accounts to pass. However, you can only have 5 of them. So if you're a newbie and a beginner and you just want to get started, I highly recommend Top Step. The main reason is that they do not have a trailing intraday drawdown. So that what that basically means is that, let's say you buy one of their 50K account here, and the profit target is $3,000 and their max loss limit is $2,000. If during the day you're trading it and you go up to $2,500 in profit, and then you lose all that money and you go back down to zero, the account is not blown because you did not hit the max $2,000 loss limit. So you have to actually go into the negatives to blow the accounts on Top Step. Whereas with Apex, if you go up $2,500, the drawdown trails. So now your drawdown that was initially at 47.5 on a 50K account is now 50,000, right? And if you now drop down, even though you may have not taken profit, if you now with Apex drop down and you lose the $2,500, your account's blown. Okay, so that's something to be aware of, and just kind of keep in mind that with some of these prop firms, trade step is top step is trade step. Top step is definitely the easiest to pass and trade with. It's just a max of 5 accounts. Only reason I'm with Apex is because it allows me to have 20 accounts and I can scale it. So I would say beginners, stick to top step. Once you have a good strategy, you know what you're doing, I would switch over to Apex. You can trade them both at the same time as well. I do have, I believe, still one top step account. I haven't traded it in a while, but I'm gonna start it up again next week. And yeah, so these are kind of the ones I recommend. Tradeify if you want to just skip the funding and eval, and go straight to funding. And then top step for beginners. And if you're kind of a veteran, you know what you're doing, just go with Apex and milk them for all they got. So, and then here's your Iron Beam and your Ninja Trader. You can open up actual live brokerage accounts. There's IBKR as well. IBKR, Interactive Brokers. I'm in Canada, so it's Canada cookies. These are a couple options just for getting your account funded. So anyway, that's kind of all I wanted to go over right now. It's just, I think I covered mostly everything from platform to prop firms. Again, questions, you guys can ask questions in the questions tab on the Discord. And yeah, we'll talk to you soon. I'm going to go over my strategy next, and then as well as a weekly recap. And then we're also going to do a series for beginners where we just go over candlesticks and go kind of from scratch and start you guys off there. And yeah, anyways, thanks for watching. Have a good one.